when the world gets nervous. What to make of that with capitalist big hedge fund manager Jonathan Hoenig, Walser Wealth Management CEO Rebecca Walser, and Pacer ETF's President Sean O'Hara. Sean, it is interesting to see gold benefiting to the degree it is, silver to the degree it is, palladium at all-time highs, what it's doing right now, all in the face of an environment that is hardly inflationary. I know anxious, that's one way, but it's been a steady climb there. What do you make of that?
Well, thanks, Neil, for having me. A couple of things on the gold front. I think it has been a safety play or a flight to quality or a risk-off play for a while. It also probably is being impacted by the fact that there's no interest rate yield anywhere in the world, and so people have to park money places, and gold has always been a good store of wealth as far as that's concerned. And then you have what's going on in China with the coronavirus and the effect of that. And my view on that is I expect that story will sort of wax and wane, and we'll get good news and bad news, and people will say it's going to be worse than everybody expected and said they got it contained. But I don't see it as a long-term thing. Interesting with Apple, I don't think the demand for iPhones over the next year, 2 years, 3 years, 4 years, or 5 years is going to be impacted. So what I think you're seeing is short-term reaction to the news today, but the demand on these products like Apple's iPhone is really just going to be deferred, and I suspect maybe in the second quarter or the third quarter we'll see a spike up as a result.
You might be right about that. We should point out that this could also just be simple profit-taking Apple, an excuse to sell. I mean, the stock just this year, after a spectacular end-of-year jump last year, it was up 15% going into today. I think about that. But Jonathan, what do you make of that? Yeah. The fact that now some of the other technology names are finally, albeit belatedly, joining Apple on the selling front here. What do you make of that?
Yeah, well, Neil, I mean, Apple just isn't any technology name. I'll say about Apple what they used to say about General Motors. As goes Apple, so goes the nation, or at least so goes the market. I mean, as Susan Lee told us, it's 5% of the S&P 500. It's 7% of the Dow. It's almost 12% of the NASDAQ 100. So it is a major component of the market, and it's likely found in your retirement portfolio, even if you didn't actively buy shares yourself. Now, this is a stock, Neil, that's not only influential, but it's tremendously overbought. It's up 85% just in the last 52 weeks. And to tell you, for Apple just to kiss its 200-day moving average, which a stock will often do in a long-term uptrend, it has to drop by about 80 points even from today's levels. So this is a worrisome indicator on a stock that's had a huge record run.
If it were to continue. Rebecca, we also noticed, we were flashing you some of the popular interest rate gauges, a 10-year note right now, yield collapsing there. So the safe havens are holding up to their reputation as safe havens, bonds and metals. What do you think's going on generally here?
Well, I think we do still have resiliency, but it was interesting in reading about Apple. You know, they closed all their stores and they have the five in Beijing reopened, but you have to take your temperature to go in, and they're controlling how many people can shop at one time.
Yeah,
so
you're right.
It's good. There's a silver lining in the sense that, you know, there's some control and that they actually are reopening the stores. The supply chains are all back open. They're just ramping up a little more slowly than they had expected. And so we do expect that this is going to have an impact, obviously, on Q2 and going forward. And it is kind of what we talked about before, Neil, on this show many times. We had an 18-month trade war. CEOs had an opportunity to realign supply chains outside of China and not be so heavily reliant on China. Apple didn't really do that, and this is another thing that is Chinese-based that is causing them problems, and it is a bellwether for all of the others.
You know what's interesting too? Go ahead, make that point, John.
Real briefly, Neil, I'll just make the point on gold. To your point, this is a long-term trend, and it's a global trend, Neil. You know, already gold is at all-time highs in a lot of other currencies, not the U.S. dollar, and that's one of the things you pointed out. Is gold. Yeah, gold has been doing well through all types of economic environments, and even as the dollar has been quite strong. So there's certainly a preference here for some of these tangible assets, whether it's the coronavirus or a slowing economy or whatnot. This is a trend that persists.
Sean, when you look at Apple, they always say timing is luck a lot of times, but in this case, Samsung's already out the gate with Galaxy phones that can do everything but make your breakfast for you. And I'm wondering, given the time horizon that Apple traditionally doesn't make its offerings until late summer, early fall, whether that's going to put it at a severe disadvantage.
Well, I think you make an excellent point, Neil. I think, when you think about 5G, I think Samsung is far ahead of Apple in that endeavor. And so there's some catching up to do on Apple, which also may be potentially weighing on the stock as well. As Jonathan said, it's up 85%. It's had a fantastic run.
Right.
And the next wave of product will all be 5G based. And unless you're involved in that, unless you're ahead of the curve on that, you probably get left behind.
What do you look for, Rebecca, just when you're focused on Apple for the time being, that it's isolated to Apple, that this isn't the start of just an opportunity to sell shares for people who realize that, hey, we've had a huge run-up?
I mean, you can definitely take some profit off the table, but I think, Neil, what we really need right now is to get some sort of resolution that we are containing this contagion. We cannot begin to imagine the ripple effects that if this really becomes a global pandemic, what we will actually see. We really have solid underlying economic fundamentals. We expect a good year, with the exception of there's an asterisk. We don't know what's going to happen with this coronavirus. So let's just hope that it can be contained and that it can be resolved. I mean, it's just such an unknown. This is one of those things that, like acts of God, you just don't know.
Yeah.
You don't.
Yeah,
Go ahead.
Yeah, Neil, that's what's so frustrating is although you could theoretically even contain the virus, the economy is a global interconnected whole. What happens in China impacts us here at home, whether it be with travel stocks or Apple in this case. These reverberations are still yet to be fully felt.
What's stunning is it's been a mild reaction globally with all of that. So maybe this is addressing that. We'll see, guys. Thank you all very, very much. I do appreciate it.